The stock market has reached all-time highs as of the recording of this video, and I think that it's probably going to be a false positive for a lot of folks. I'm going to give my reasons as to why coming up. What's going on, everybody? My name is Brad, and this is Own the Chaos, where we talk about everything investing and business. Today's topic is going to be on the S&P 500 and the stock market and its all-time highs that it's reached as of the recording of this video. I'm going to also explain why I don't think it's meant to last. And so let me just talk about why the stock market is doing what it's doing first, and then I'll give my explanation as to why I don't think it's going to make it too much longer at this rate. So previously, I talked about the S&P 500 and how I felt like SPY was going to experience new highs this year, and it actually did. And the reason why I said that, there was a lot of factors in there, but one of the main reasons was the Fed. The Fed decided not to adjust interest rates, that we were going to continue to see new highs on SPY or SPY, and we have as of this recording. But I don't think that it's going to sustain. So just to kind of give you an idea, so as you can see here by an article from Seeking Alpha, Federal Reserve does its job, doesn't cut the policy rate, and gets a stock market rally, which is exactly what the Federal Reserve was looking to do today. As you can see, Federal Reserve officials did not cut its policy rate of interest in the latest FOMC meeting, but did get the stock prices moving toward a new historic highs. And while that's very exciting, and while that's very exciting and very good news in the short term, and the long term, I think we're going to see an economic recession, or at the very least, a correction of the stock market. And here's why. So if you go and look at the SPY chart over at WeTradeHQ.com, where it's absolutely free to do technical analysis and talk about your favorite stock amongst your friends. If you look at SPY, you see that today it reached all-time highs of 296 and some change. But looking at the technicals here, it has broken a key resistance point, but it looks very overextended. This is the daily chart, and you can see RSI is very extended. It's riding along that upper band. And so I think that we're going to see at least a pullback in the short term. But long term, guys, long term, we also have to look at precious metals. And if you guys recall on my latest video about buying up gold and how you can make money on gold, there were several factors that I said that would constitute me leaning towards buying a gold related stocks. And so as you can see on a particularly related gold stock that I have been trading most recently is GOLD. It has made a strong bullish move and continues to increase on higher highs. I actually talk to folks within my morning mentorship, where I go live with folks from 9 a.m. to 10 a.m. Eastern time to talk about my strategies and my thought process throughout the beginning of the day, where I help them learn how to own the chaos that is the market. I explained to them that I felt that as if this was a key resistance point here, and that if it actually broke over this resistance, that gold would continue to break out into much higher highs. There's been a lot of factors that's gone into that, though, not just technically speaking, but also within the geopolitical space as well. We have issues with Iran. Iran, as of today, just shot down a U.S. spy plane that the U.S. claims was in international airspace, and Iran says no, that wasn't. Blame has also been placed on Iran on attacks on oil tankers, which again creates instability and fear. And then also the China and US trade war talks as well. There's a lot of fear going on with investors, and so they're starting to buy up gold considerably now. So that all those factors together, I think that as long as gold continues to go up, that this SPY move is a false positive. I think that when you really look down to it, the Fed's going to eventually have to cut rates. And if they do that, that could allude to the fact that the economy is not doing as well as everybody thought it was, and that we could end up starting to see a significant correction this year. And so look for that to happen, probably going into late summer, early fall. That's my anticipation of when that will really happen. Now, having said that, the G20 summit is on June 28th. Today's June 20th. If that happens to go well, we might see a little bit of a shift there. But I think that the talks probably won't go that well, knowing China how they are, and also knowing how our president can be, that the talks could end up going south rather quickly. So I'm not that positive on that outcome there. So looking forward, I think that if the talks go well, that perhaps we'll see a little bit of a pullback on gold. But ultimately, the economy as a whole and the stock market is well overdue for a correction. Bottom line there is that we're going to experience some sort of correction in the near future. And I think that if that correction happens, then everybody will be leaning towards silver, gold, precious metals, and that should be something that you may want to consider looking to as well if you're looking to invest in something as the market starts to make its correction. So that's it for me, guys. Thank you so much for tuning in. If you like this video, I certainly would appreciate a thumbs up and a subscribe. I do videos as it relates to the stock market 3 times a week, and then I also do videos as it relates to business and the business that I even run, which is WeTrade HQ, 3 times a week as well. So Monday, Wednesday, Friday, look for those business related videos, and then Sunday, Tuesday, Thursday, look for those stock related videos where you can get your learn on there as well. So that's it for me, guys. As always, I will see you all before the bell, and B Smith is out.